forward to that, Kia. Well, you guys, with the holidays approaching, the last thing on your mind is probably tax season, but it's something you might want to consider as expiration dates for some valuable tax savings loom. Here to give us the financial lowdown is the watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning.
Okay, so before we make any purchases we plan to write off, what do we need to know?
Oh boy, this gets very complicated. First and foremost, you probably need an accountant's help. If you're taking write-offs, and let's say if you're a small business owner, you're going to be able to take a little bit more in regards to maybe a portion of your house if you have a home business, your car, internet expenses, whatever it may be. This is something you need to consult with on a case-by-case basis, and make sure you save everything, because you never know when the IRS is going to come back to get you.
And a lot of people think that they can write off certain items, and it turns out they can't, so it's always good to get some professional help so you know that you're on the right path instead of being surprised at the end.
Well, yeah, exactly. Well, some people, if you own a car, they think they can write off the entire, you're buying a car, you can write off the entire payment. In reality, you can't. You can take a portion of that. You can count your miles, and each mile is worth a certain amount of money, so there's some paperwork involved. No, you can't write off the Nintendo games and stuff like that. It's not possible.
But that's the fun stuff.
Yeah, well.
Bearer of bad news. Okay, well, let's talk about this home buyer's credit. The new home buyer's credit, $8,000 tax credit. It expires the 1st of December. Do you think more people are going to be making home sales by the time that credit is expired, or do you think people will stay smart?
They bother me a great deal, these tax credits, because they get people to do things sometimes that they probably shouldn't. And we see that sometimes as, you know, so-and-so's got a sale, so I've got to go out and I've got to get a new pair of shoes, I've got to get something. If an $8,000 tax credit is what is pushing you over the edge to get a home, then you probably shouldn't be buying a home. We've seen that recently with the whole cash for clunkers scenario, where we say, okay, here's $4,500, whatever the write-off may be. Now 25% of these people that bought new cars are regretting it, and they're having trouble making their payments.
And I think the problem is sometimes people see the savings, but they don't see the long term of, oh, I actually have to pay this off.
Yeah.
Yeah.
I mean, it's great they kick your clunker for $45, or, you know, it's great you're getting the $8,000 tax credit. Fantastic. But that can't be the deciding factor whether or not you're going to do it.
Okay, let's talk about giving to charities. Now, is that a tax write-off?
Absolutely, yes. You have to, obviously, you have to be filing all the stuff, keeping track of your receipts. They're being very, the IRS is getting much tougher in regards to these things, because sometimes people, they donate furniture to certain charities or to Goodwill or whatever it may be. Track everything that can come back to haunt you.
Yeah, because I've donated things before and they give you a receipt.
Yes.
Yeah.
You have to keep track of everything in regards to that, and yes, they are a write-off.
Okay, well, Chris, thank you so much.
It's been 9 months since President Obama has taken office and promised breaks to those struggling with their mortgages. Now, some homeowners are finding out that's just the breaks, man. Joining us to break it down is our financial wizard, watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning.
All right, so we're talking about the HAMP program, housing affordable, home affordable mortgage program.
And we talked about this here on the show way back when they first started this with makinghomesaffordable.gov, where you would go there and you would punch in your information to see whether or not you could get some government sponsored loan or get your rate cut down. And most Americans are kind of realizing here that this is just, it's not working. The government program, it's taking too long for them to actually work their way through the system. I've actually spoke with many of your listeners of the program that have, you know, contacted me in regards to this to try to help them out, and it's not panning out too well.
Yeah, 17% of those, I guess, who have applied have had loans modified or monthly payments cut. So were people smoking hemp when they thought hemp would work? Is that what we're looking at?
Could be. Well, I'm a big believer that sometimes you have to just take your medicine. And I think a lot of people are also walking away because they're seeing the value of their homes drop to such a degree that, you know what, what's the point in me staying in the house? You're also dealing with the fact that we've got unemployment that continues to rise. You can refinance your loan all you want, but if you don't have a job to afford the house, then what are you going to do?
Right.
What does that mean to you? So it's a difficult scenario that we're in.
All right, so, you know, 70% of the people with modified mortgages are defaulting anyway, and many more on that brink.
But this is the problem. They need a default. Defaults are okay, and I've written about this. You know, downturns happen. They need to happen because we need to clear the system. If we just keep these homes on life support and keeping people in homes that they can't afford in the first place, you're not doing that person any good, and you're certainly not doing the economy any good.
Right, because the banks, obviously, they can't handle all this.
Well, the banks are getting help from the government in regards to some of the money. The banks are so underwater in regards to all these various different loans, and then we got commercial real estate coming down the pike as well.
All right, Chris.
A lot of fellas might like that, Andy. All right, stocks are up, which is good for Wall Street. But what does that mean on Main Street? That's what one viewer wants to know. Take a peek.
I just opened a 401k account about 2 years ago, and I remember when the Dow was in the 12,000s that I wasn't taking that hard of a hit. So now that I see that the Dow is closed just above 10,000, what should I do? Should I throw more money into it right now, or am I being overly optimistic?
Here with the answer is the watchdog on Wall Street, Chris Markowski.
Good question there.
Yes,
it's
good
one
question.
I get a lot. The problem is that people try to guess what the market's going to do over the short term. They think of it in terms of, Dow 10,000, Dow 12,000, Dow 14,000, when it's more a function of your time and your own individual situation. If you've got 10, 20, 30 years to retirement, you've got a long way to go. So you should be consistently putting money away. I look back, I'm going to look back, and I think most people are going to look back. People who are smart are going to look back at 2007, 2008, 2009, probably into 2010 as some of the best years ever they had for investing because they were able to get stocks when they were cheap. They were able to buy companies on sale. And a lot of these companies pay nice dividends. And when you bought them when they were cheaper, you got a higher yield. Most of our long-term portfolios for our clients, our long-term guys, their portfolios are higher now with the Dow just hitting 10,000 than when they were when the Dow was over 14,000.
Really?
Yes, because you dollar cost average at a lower price and it comes up. Then you're also picking up a lot of these companies, with higher yields when they went down, and it compounds over time. One of the things that I have on our website, it's unfortunate that this is not taught on a regular basis, the power of compounding interest. If you own high-quality companies, companies that pay you to own it, and you just watch those yields compound over time, it's amazing. Time is your most important asset. Time,
people
not how much
a lot
money
of times get greedy, or they just want to make the fast buck, and
greed.
Well, it happens.
Greed always sets the trap in everything.
Yeah.
World's second oldest profession is get-rich-quick cons, and quite honestly, most of these people you're going to watch on these business programs and radio programs, they're conning you. I go after the James Cramers of the world. He's not working in anybody's best interest, trying to tell them what a buy, sell, and hold is over a short period of time.
Well, I mean, and he's had to confess over the past year all the mistakes that he's made and the false information that he's given his viewers.
Oh, well, basically, you're about as well off as flipping a coin and listening to him. So, like I said, if you want to gamble your money, go to Vegas, because I hear they give you free drinks and maybe a room if you lose a lot of money.
Yeah, hopefully you'll be hot at roulette. Well, what do you think the next round number is going to be? Because some people are saying, well, with the momentum right now, we might see it raise. What do you think?
It's tough to tell. That's why I don't guess or try to play any of those types of things where I can say, okay, we think it's going to 11,000. Let's put our money in. Oh, no, it's coming out. Let's take our money out.
Sure.
That's crazy. You can't do that. I mean, the Dow hit 10,000, but you know what? It also hit 10,000 back in 1999. And, people saying, oh, the market hasn't done anything in 10 years. Well, if you own the right companies and if you've got companies that are paying you to own it, you've done well.
Yeah, well, Chris, thank you so much for the good information this morning.